Good morning. We are going to start off with the EV to EBITDA model. And yesterday, if you remember, just towards the end, I just introduced you to the concept of EV. And EV ka full form kya tha? Enterprise value. So if you remember, yesterday we had taken this example that if I were to buy out Reliance Industries, then what I will, how much money will I have to shell out? Or what do I get in simple words? What do I get? Will I get their entire equity? Yes. But सिर्फ पुण्य नहीं मिलेगा, पुण्य के साथ साथ पाप भी मिलेगा. So I'll get their equity. Additional to the equity, I'll get also the debt component. Okay. I'll get equity, I'll get debt, but obviously whatever cash they have, that is also what I get. So how did we calculate the enterprise value? We calculated it by share capital, sorry, not share capital, market capitalization. And what is the difference between share capital and market capitalization? You know this? In our balance sheet, we have share capital. But yesterday we discussed the concept of market capitalization.
The value of the company, if you want to buy the entire value.
No, just the market capitalization. Correct. So if you remember, yesterday we discussed market capitalization. कैसे calculate करते हैं? Number of shares multiplied by current market price. And how is share capital calculated? Number of shares multiplied by face value. We don't use the word historical value for shares. We use it as a face value. Whatever is written on the face of the share certificate, that's the face value. Okay. So let's remember this point. DMart. What was the face value? 10 rupees. Today's market price of DMart will be around 1200 rupees or 1300 rupees. Okay. So just as an example, assume that DMart has only 10 shares, just as an example. Then what would be the share capital of DMart? Tell me. It will be 10 multiplied by 10 if I were to calculate the share capital. 10 is what? Number of shares, and 10 is what? Face value. But if I were to calculate the market capitalization, it will be 10 into what? 1200. That will be the market capitalization. Is this okay? This is the difference between share capital and market capitalization. Now what did we say yesterday? How did we calculate earnings value? Earning value was calculated by market capitalization plus debt minus cash. Okay, cash and cash equivalent. Now, the big point is, for every single company, do you think I'm going to actually calculate this? How much is enterprise value? Download all the balance sheets. See now, for example, what I've done is, don't blindly copy this. I'm going to give you time for this entire thing because you have to understand what I've done. Okay, so this is 5 years data that I've taken. Year ended 19, 18, 17, 16 and 15. 5 years data. Okay. Now, do you think this 5 years data, I'm going to calculate and I'm going to download all these balance sheets and then I'm going to calculate each and every data? No, impossible. So who is our best friend? Or money control. Both are our best friends. So what did I do in simple words? Reliance. Enter. Okay. Now where do I go? I want to check some ratio, na? So where do I go quickly? I go to financials. In financials, I would go to ratios. Okay, great. Now in ratios, what are we trying to find out? We are trying to find out the valuation of Reliance Industries, right? So can I say this is a valuation ratio? Yes or no? Right. So moving ahead, we were talking about earning value. So by the way, let me just quickly recap. We went to the ratios tab. And inside ratios tab, you can see a lot of ratios, and now we are on valuation ratios. Amazing. This is ready made. So nice. Do we get the enterprise value? Acha, which years are these? Always remember, I told you, extreme left will be the latest current year. And then we go on and on. Piche piche. So what, and they all allow us to copy things. So 1, 2, 3. Okay, so actually I just want enterprise value and I want EV by EBITDA. So basically that EV by EBITDA is also directly given. Yesterday that is what we were talking about, na? EV by EBITDA, that also is directly given. Who can tell me what is this 8.54 of EV by EBITDA? What was the interpretation of that? 8 times of your EBITDA, 8 times of your earning before interest, tax, depreciation, amortization. Is what? Is the value of that entire company. How much times I am ready to pay of the earnings to acquire that entire company. When what is Reliance ko I want to buy out, then I have to understand current earning kitna uska, how many times I am ready to pay to buy out the entire company. Okay, now you can check here. Original years I was ready to buy it at 8, then I was ready to buy it at 8, then I was ready to buy at 10, at 10.9, and at 15. So can I say the numerator might be increasing? Might be increasing. Okay, so EV has increased definitely. Market capitalization of Reliance has definitely increased. 6 lakh crores. Acha, even I didn't know the exact figures. From he's saying from 6 lakh crores to 10 lakh crores. Market capitalization increase ho gaya. So I have actually gotten this formula directly, EV by EBITDA. But why were we requiring this? If you remember yesterday we said a past analysis bahut ho gaya. Whatever we have done till date is past analysis, balance sheet analysis. Now based on this past analysis, we have to predict what would happen in the future. That's what we are doing today. So for that I need enterprise value, I need EV by EBITDA, and I need EBITDA value also, no? Okay. If you remember, I had told you that this EB, that are your favorite discussion, which you always forget. Sales minus cost is equal to EBITDA. Your favorite discussion, every time you say what is this, and I told you that ye kitna bhi yaad karo, this is nowhere appearing in the P&L. But are these figures very important? Yes. Can you quickly recap it for me? Sales minus all these costs, operating costs, is your EBITDA. From EBITDA, what do we deduct? DA. What do we get? EBIT, earning before interest tax, also known as operating profit. Then we deduct tax. No. We deduct interest. We get EBT, also known as PBT. Then we deduct tax. We get PAT, or earning after tax. Same. Today it was much more smooth. Practice makes man and woman perfect. Okay, so here we are on EBITDA. Can I say this is a very important factor? Right, because the other day, if you remember, I had given this example. Dono companies 100 ka hi sale bana rahi hai. Company A, company B. Here the cost required is 30 and 40. In simple words, can I say A is more efficient than B? To achieve a sale of 100, they are spending less money. So if you remember, I had taken it in this way: 200 and 80 and 120. If you only look at this, 70 versus 120, B is better. But then what did I tell you? Don't directly compare 70 and 120. Also check their efficiency level. Na? Divide this by 2 to make it comparable. Then we might understand that A is doing actually much more better than B. So that is why this EBITDA component is very important. Very, very, very important. But what is the unfortunate thing? Does it appear directly in the P&L? Never. It does not appear in the P&L. And what is the simplest way to calculate EBITDA? Is this. Go on money control. Check these. Now what I did was I directly copy pasted these 3 rows. Control C. I'm moving to my Excel sheet now. Okay. I'll just show it here so that you get a better understanding. It's okay. I just need these 3 parameters. Na? So if I were to, if I required many parameters, then I would have even done some analysis ki iska export kaise ho sakta hai. But it's not required only for me. Okay. See, I got these values. Now I don't need this. This is not there in my analysis. So I'm just deleting this one. But instead of that, what do I want? I want what is the value of EBITDA. Now this is 8th standard mathematics. I know what is EV. I know what is EV by EBITDA. And how will I calculate EBITDA? Divide by, na? EV divided by this. Everyone agrees? Yes. And I'm just copy pasting it here. Have you understood how did I calculate earnings value? Yes, normal mathematics. So I'll take you to this main sheet now. That is how I've calculated. I'll show you even by pressing just F2. What did I do? EV divided by EV by EBITDA. Correct? That's how I got the EBITDA value for all the 5 years in one shot. Now I want to check, very important, this is the next step. Growth in EBITDA. Year on year, should their earnings increase? Yes, their earnings must increase. Tabhi to maza hai. Okay. So what I have done is growth in EBITDA. How to check growth in EBITDA? Tell me. It's very simple. These are all my EBITDA figures. How do I check the growth? अच्छा, I want 15 to 16 में growth कितना हुआ? Percentage. This minus this divided by this same figure into 100. Correct na? Again basic mathematics. Okay, so what did I do? Just check this out. 16 का EBITDA minus 15 का EBITDA divided by 15 का EBITDA into 100. That is how I got a percentage increase in EBITDA. Is this okay? Obviously same copy paste here. Now 17 minus 16 divided by 16. Same and same. So now if you check my growth in earnings, how much is my growth in earnings? It's 18, 8, 15, but 12. So my EBITDA growth has reduced a little bit. Okay, and how do you understand that because the EBITDA growth has also reduced, the denominator reduced, and because the denominator reduced, my EV value also increased, na? Normal mathematics. If my denominator is reducing, my overall value will increase. So, ठीक है, but now if you check, 17 to 18 growth is not that good, but 16 to 17 growth was good. 15 to 16 was bad. So can I just take one year, or it would be better that I check on an average what is the EBITDA growth? On an average what is the EBITDA growth? So what did I do? What is the next step? Average 3 years growth in EBITDA. And obviously मैं कौन सा लूँ? If I were to check for 19, 18, 17, 16 would be an appropriate figure, na? Latest 3. अच्छा, there are some theories which say take latest 5. आप जितना analysis करोगे उतना अच्छा है. But I believe latest 3 growth in EBITDA should be good enough. So what I have done, normal simple mathematics again, is equal to average of these 3 numbers. So what did I get here? On an average, how much did EBITDA increase? Yeah, तो clear है क्या? First, without looking to the notes, we'll just try to understand how are we calculating this. What is the step number 1? We just try to copy paste from money control. What values did we get from money control? We got EV. Number 2, we got EV by EBITDA. Now what do we have to calculate from this? EBITDA. We calculated EBITDA. Then step number 2, I calculated the growth in EBITDA. Step number 3, I calculated the average EBITDA of past, so average growth of EBITDA for the past 3 years. Very easy till here? Yes. अब ये growth तो मिल गया मुझे. So in simple words, can I say on an average, Reliance EBITDA grew by 12% year on year. You should also know this term, YOY, QOQ. You will get these terms very frequently in your newspapers, Business Standard, Economic Times, or on even CNBC. YOY means what? Year on year. This is not my short form. I have not designed the short form. It's a very commonly used short form. Year on year growth. Year on year means what? 2018 versus 2019. QOQ, quarter on quarter. March ended quarter versus June ended quarter. That's a QOQ growth. Okay. So tell me YOY, how much average EBITDA growth has taken place? It is 12%. Now tell me logically what would be my expected EBITDA in the next year. See, this was my latest EBITDA. 19 का EBITDA इतना है. So what would be my expected EBITDA? Tell me. More than 19. 2019 में जितना EBITDA है उससे ज़्यादा होना चाहिए. अरे yes or no? Yes. By how much percentage? 12%, because that is the average rate at which it has grown. So now what formula might have I used? Simple. अच्छा, मैंने इसमें I might have done basic math. See, अगर previous year का EBITDA, this is like 8 standard ratio analysis. If previous year's EBITDA was 100, on an average, it should have been 112. देखो यही है ना figure, 112.403 होना चाहिए. And if the latest EBITDA is this, where did I get this from? 19 का EBITDA. Correct? This is the 19 ka EBITDA. So if it's the 19 ka EBITDA is this much, then what should be my expected EBITDA at 20? And this is basic cross multiplication. This multiplied by this divided by this. Right? So what is my expected EBITDA? Tell me. 76,091 crores. Okay. And what is the latest EBITDA which Reliance has posted? 67,695 crores. Is it okay till here? Yes. Do you want to write down these many steps first? I'll share this if you want. Done. But at least what you should do is that write down stepwise what we have done. Because see, this calculation, once you have one sheet ready with you with formulas, then life becomes so easy. You just have to copy paste it. Khatam. Everything you will get in 1 minute. What should be the value? Okay. Yes. So write down valuing that the title is why? Hmm. 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 No, I'll tell you. See, this is what, if I'm talking about 18%, 18% is a stupendous growth. Very good growth. I'm not even considering this. In fact, I'm taking a little bit low or skeptical view. थोड़ा ईज्ड आउट व्यू ले रही हूँ मैं. अगर मैंने ये भी 18, see, I'll just tell you, if I were to take this also in the average, I'll say, why last 3 years? I'll take last 4 years and check where this calculation goes to. Then 13% growth. I know that maybe this might have been extraordinary, so I'm skipping it in fact. I'll tell you why this growth of 15, 12. See, I know that the overall growth percentage decreased, but here if you check from 59,000, it has gone to 67,000 also, no? And this is only Reliance Industries. Now, if you check about Reliance Group Consolidated, we have two major companies in the Reliance Group Consolidated which might do very well in the near future. And which two? Jio and Reliance Retail. Ideally, these two might do very good in the near future. उनका तो हमने consider भी नहीं किया है. So in fact, this is on a lower side expectation. Okay, yes. So that's what I'm suggesting, that if there is any extraordinary growth, so I feel this is an extraordinary growth, 18% growth. We have anyways taken it out from our formula. So let us write it down. What heading I was dictating? No? Okay, write down the heading. Valuing the expected, valuing shares, don't write expected, valuing shares using EV by EBITDA model. Valuing shares using EV by EBITDA model. Okay. I feel that Bina Sharma, you should write properly step by step. But actually, step number 1 is go to money control. Because what will happen over a period of time after 3 years, or maybe why 3 years? After 3 months, if you are trying to do your fundamental analysis and you'll search entire screener and you don't get this information so much readily available on screener. So amongst which two websites, it is money control. So we'll write it in this way only properly. Number 1, go to money control, then dash. Money control dash. What was the next step? Financials dash ratios. Money control dash financials dash ratios. Number 2. अब ratios में कौन सा ratio में आया था ये? See, these are so many ratios. In that, valuation ratios dash. So second step, valuation ratios dash. Which two values do we need from this? We need EV and we need EV by EBITDA. So copy paste EV data for last 5 years. So copy paste EV data and EV by EBITDA data for last 5 years. EV by EBITDA data for last 5 years. Yes, what will be step number 3? Calculate EBITDA. And how would we calculate EBITDA? That formula was there. Matlab, this is mathematics, na? This is EV. We know what is EV by EBITDA. So what will be the value? How will we calculate EBITDA? It will be EV divided by, so EV divided by EV by EBITDA. That value, X. Okay? Okay? Next one. What did we calculate then? Growth in EBITDA. Calculate the growth in EBITDA. What is the next step? Calculate what? Average growth of EBITDA. For past how many years did I say? Past 3 years. But I told you that there are many authors who feel past 3 years, some feel past 5 years also. And in our entire discussion, have we taken an aggressive view or a conservative view? A little bit conservative view we have taken in our calculation. Okay, this is the average growth rate in EBITDA. Now the next step is what? Expected EBITDA. Correct? Next step is calculate expected EBITDA. Correct? And how do we calculate expected EBITDA? Current EBITDA plus increase of average EBITDA ना. अभी ये calculation अगर आपको मतलब see if current EBITDA is 100, then average growth rate was 112. If current EBITDA is this, then what will be the average EBITDA? So we might write this as a mathematical formula also. इसको mathematical formula कैसे लिखेंगे?
Just divide by x. मतलब is equal to
Current plus. So
I mean, if it is written in example format,
whatever, we will write in example format. That is better. हाँ, so basically into 1.12 types में भी आ जाएगा क्या? Is equal to 6, okay, is equal to this multiplied by 1.11 मतलब to be precise, I was just trying it out. 1.112403 ना roughly. नहीं. So better we will write an example na, so that you get the exact calculation. Write down example. If EBITDA of 2019 is 67,695.6. If EBITDA of 2019 is 67,695.6. हाँ तो मैंने वही ट्राई किया था अभी. अच्छा ठीक है. Fraction. Okay. Anyways, we are writing it as an example. And write down and average growth rate. We have written assume in the beginning, na?
no if.
If whatever. And average growth rate is equal to 112.403. 112.403. Then expected EBITDA. Then expected EBITDA. Oh, sorry. Average growth in EBITDA was 12 point, na? Average growth in EBITDA, whatever we have written, was not 112. It was 12.403. Average growth in EBITDA was 12.403. Okay. Then what did we write? Expected EBITDA can be calculated as. Then expected EBITDA can be calculated as. So you can write here maybe if current is 100, then expected is 112.43. And if current is 67,695.6, then expected is 76,091.9. Okay. Right? So now again taking a base view, what do we have now? We have a expected EBITDA. We have expected EBITDA. Correct? So we have three parameters if you have understood by now. Parameter number one that we have is what? EV value. That is the entire value of the firm. Does this include also debt? Yes, this also includes debt. Then number two, we have the EBITDA value. And number three, we have X. X is what? EV by EBITDA. Okay. So out of these three, which value do we have right now? We have this expected EBITDA value. So this value we have, number two value we have. Now if I say that even if EV by EBITDA, this for the next year, even if it remains same, otherwise मुझे क्या करना पड़ेगा? जैसे मैंने एवरेज ग्रोथ रेट निकाला EBITDA का, वैसे फिर EV by EBITDA का भी एक एवरेज ग्रोथ रेट निकालो, फिर उसका एवरेज ले लो. I don't think that is logical again, because what is EV by EBITDA? Tell me. That is the number of times I am ready to pay of earnings to buy out the company. One more time. What is EV by EBITDA? How many times of earnings I am ready to pay to buy out the entire company? Now you only tell me, today so at the year ended 19, I am ready to pay 15 times of the EBITDA. Then in 20, obviously इतना तो मुझे pay करना ही पड़ेगा ना? Can I say, wait, I'll take average of past 3 and then I'll pay you? What will Reliance say? अरे latest जितना उतना तो भरना पड़ेगा. Agreed? Have you understood the logic why we are not averaging it out again? Yes? One last and quick time. Quickly tell me, what is EV by EBITDA? How much times of earnings I am ready to pay to buy out the company? See, but at year ended 19, I am saying that if your EBITDA is 1, I'll put it in this way. If your EBITDA is 1, I am ready to pay you. If your EBITDA is 1, only EBITDA. If your EBITDA is 1, I am ready to pay you how much to buy out your company? 15. 15 times of EBITDA, na? What does this 15 rupees signify? How much times of EBITDA I am ready to pay to buy out your company? Okay. So one more time. If your EBITDA is 1, EBITDA मतलब simple छोड़ो यार, आपका earning 1 rupee है. If your earning is 1, I am ready to pay 15 times. I am ready to pay 15 rupees. Give me your company. Is this okay now? Yes. Now, if I'm a buyer and if I say, wait, right now at the year ended 19, I was ready to pay 15, but year ended 18, I was ready to pay 10. Year ended 17, I was ready to pay 10. So what I'll do, I'll take an average of that. Is this nonsense? It is nonsense. It is nonsense. Because see, the buyer can't say that I'll take an average and then I'm ready to pay. See, latest performance के हिसाब से I'm ready to pay ना. So I'll tell you a simple thing. I want to buy a house. I want to buy a house and it's a very beautiful house, facing, everything is nice. And I say I am ready to buy 1.2 times the value of the current whatever valuation you have taken out. So assume that you expect that this house should be sold at 1 crore. I am ready to pay 1.2 crores at the year ended 31st March 2019. But then now the seller is saying at the year ended 20, how much money I will fetch. अब आप ये सब थोड़ा thought process दिमाग में लाओ. Assume that you want to sell a house. You want to sell your own house. Instead of selling a company, assume that you want to sell a house. Okay. Everyone's house is worth 1 crore rupees. I am a buyer. I come to your place and I'm saying and I'm telling you that I'm ready to pay 2 times of the house's value. Today, 31st March 2019, I'm ready to pay 2 times of your value. Okay. then you will say, wait, I don't want to sell it today. What will happen if I sell it after 1 year? Is what you are trying to calculate. Now, if when you are trying to calculate what will happen at 2020, can I say minimum 2 times? So you have to get, na? Why minimum 2 times you have to get? अरे वो तो अभी बेचेंगे तो पे मिलेगा. Right? Now, can you think it in this way that while calculating what I will get at year end at 20, I will take an average of what I would have got at year end at 19, what I would have gotten at 2018, what I would have gotten at 2016. I'll take an average and then I will decide. Is this illogical? Yes. You're selling your house. Whatever is the latest multiplier, that is what you want as a minimum. Now do you understand the logic? Yes. Now instead of selling your house, you want to sell your company. Correct? Yes. So what am I going to do logically? Tell me. Now I'm trying to find out your earnings. So I'm trying to calculate your expected or forecasted enterprise value. Like I calculated your expected EBITDA. I calculated EBITDA at 20. Now I'm trying to calculate what will be the value of your company at 2020. And how can I calculate that? Tell me. Very good. It will be nothing but EBITDA, expected EBITDA, multiplied by what? 15. See, expected EBITDA is whatever. जितना earnings है, उसका 15 times तो चाहिए, boss. What are, now again, you all are sellers of the house. What are you saying? Even if I sell it today, I am getting 15 times the value. So if I sell it after 1 year, I need at least 15 times of the then value. The then value. That is why we calculated expected EBITDA first. And then we are multiplying it with the multiplier of 15. So now if you check here what I've done. What will be the next step? Tell me what into what? Okay. So what am I going to do? Is equal to EV by EBITDA ka this one multiplied by what? 76091. Okay. Wait, I know there's a difference. So this is a forecasted EBITDA. Okay. I'll tell you both thought processes in this because I try to check many books on this. Even I have learned it from somewhere. Okay. There are some, I'll tell you the thought process difference also, some authors. See, this is no law. First of all, understand this. You say, oh, why there is a difference? Why should there be a difference? This is not law. No one can say a valuation has to be done in this way. Valuation models are different. Every person might feel that this is a correct valuation model. True? Everyone agrees? So now if I go by a traditional method, now I'm calculating first by the traditional method. So this is what, who can tell me what is 11,43,661? By the way, 11,43,661 crore rupees is the valuation of Reliance Industries. This is the EV of 2020. So if I were to buy out Reliance at that stage, then it will be whole value, whole entire Reliance industry will be 11,43,661 crore rupees. Now am I interested in whole value? Now understand, you all are investors. Now go back to the normalcy. You are not owners of Reliance Industries. 2 minutes के लिए बना दिया था. You are normal shareholders. Okay. How much are you going to buy? 1 share, 2 share, 10 shares, 100 shares. So you are interested that okay, Reliance's whole value is this. Okay. But I'm not really bothered with this. I want per share kitna value hai. Correct? So what are you interested to check now? If this is the total value of Reliance, what is the value per share? Logic is clear. And from where I might have gotten this data? How many are number of shares? Which sheet? Very good. In money control, we had gone to shareholding pattern. Remember this? Shareholding. In shareholding, the second column. Category of shareholders के बाद second column कौन सा है? Number of shares. Total number of shares, na? This is okay. Total number of shareholders है. Okay, I'm going down. See, left से second है देखो. Total number of shares. Oh my god. So, but we have to convert this into crores, na? So 618 crores, 82 lakhs, 2330. So that's why I've taken 618 point. I hope this is visible. 618 crores, 82 lakh shares. So that's what I've taken. 618.82. Now what have I calculated? Now tell me. If I divide this by this, what will I get? Why am I saying this is the target value? अच्छा, सबसे पहले 1848. What does this mean? This is the enterprise value of one share. I'm buying out Reliance Industries, only one share. Okay, that is the per share ka valuation. Okay, but so this should match with the current market price. 1848, should it match with the current market price? No, no. Why? Because this was what? This was the forecasted enterprise value. Not this year. This is 2020 year ended. This is the future value that we are trying to calculate. With me? Yes. So ideally it should be at 1848.13 at the end of 1 year. Ideally. Now the question is, do we have an investment opportunity here? For that we should know what is the current market price and see. Current market price of Reliance Industries is 1249. Okay. Now I generally tell on a safer side. Okay. What you can do is, again there are two views, that either 2/3 or 3/4 of the expected value. Utna to return chahiye na? See, if 1800 is the expected price after 1 year, and if I put this money in FD, 7% तो मुझे ऐसे ही मिलने वाला है ना. तो minimum is 7%. But am I going to play this much risk for 7%? No, I need at least a 25% return. And can I say that also gives me a margin of safety? 25% expected value से 25% कम. Expected value से उतना अगर मैं कम try कर रही हूँ, then even if it does not rise to my expected value, even if it rises 10%, I'm still okay. Correct, na? Yes. So how will I calculate this now? This multiplied by what? 0.75. And there are some authors which say, why 3/4? This is 3/4 is 75%. Na? Instead of 3/4, take 2/3. 66%. But I feel that's a big discounting. From 100 to 66. This is a too big discounting is what I feel. So even if you are getting a 0.75, and even if your entry price is 1386, should be good enough. And today we are even below that. 1259. So ideally, as per the EV by EBITDA model, we can buy Reliance Industries. At least for 1 year. Don't expect that Rachna has told today, then tomorrow it will hit the target price. You have to wait at least for 1 year in this case. Exactly. So that's what I'm coming to now. इसीलिए ये मैंने आपको अभी कैलकुलेट करके बताया. Now understand, forecasted enterprise value है ना वो. The forecasted enterprise value. Should I take the entire value or value which is available to shareholders? Value which is available to shareholders means what? When I calculated the entire value, it included what? Share capital, debt, and cash equivalent. Non-current, current liability आता नहीं इसमें. Enterprise value में 3 things come up ना. Which 3 things come up? Shareholders funds, debt, and cash equivalent. Okay, wait. Can I say this cash could also belong to shareholders? Agreed. But debt ka value which I have added to the enterprise value. Does this belong to shareholders? No, we'll have to repay it, na? So the correct view which I feel, that is why I had not done this calculation earlier. Now what is the correct way? See, that's what I've written here. Can you see this? Deduct debt. And that this is more logical is what I feel. Because enterprise value is what? Value of shares plus debt. But debt ka value doesn't belong to Equity shareholders, na? See, I'm talking about buying out the company. Agreed. But buying out the company includes two components. Which two components? Equity and debt. I'm going to get only the equity component of that, na? So full value of the firm may say I'll have to deduct what? The debt. So now if I do that, I would drill down, understand? I'll drill down from enterprise value to equity value. Yes? Enterprise value included equity and debt both. Correct? From enterprise value to equity value. What did I do from this step to this step? Nothing, just deduct debt is more logical. Agreed? So this is what I have written as a note for you also. Ideally, we should deduct debt from here. Now my enterprise value, which was excuse me. Now my enterprise value, which was 11,43,000 crores, has now gone to what? 10,25,000. How did this happen? Now if you see here, the first formula is normal. This into this is normal. But what did I do? Minus what? 1,18,000 roughly. 1,18,000 crores. ये debt का value कहाँ पे मिलेगा मुझे? Where will I get this debt value? Balance sheet. So help me out, find this. Assume I don't know anything, you are teaching me now. Where will I find it? Huh? Financials. In financials, balance sheet automatically opens up. Where do I check in balance sheet? Non-current liabilities. And in non-current liabilities, this long-term borrowing is nothing but debt. Correct, na? Long-term borrowing is nothing but debt. So this is 1,18,098 again in crores. So 1,18,000 I have roughly taken. Okay, 118,098. I'll just change this 118,098 to be more precise. Thoda sa valuation change hoga. Okay, so now I hope you have understood that this is a little bit more appropriate way of calculating it. We have reduced the debt also. Now what did we boil down to? Again, then what have we done? Number of shares. So divide kya isko? This number of shares. Then what are we getting? This is now the target price. So my target price has gone down from 1848 to 1657. 200 rupees directly down. But still I believe this is a reasonable one. Correct? So what I'm doing is I'm just deleting this and I'm taking it down to here. And what did I say? At least iska, how much discounting I should do? 25% discounting at least I should do. I might not get a 25% return by the end of the year. At least 10% return is what I minimum expect. Na? So my target price, say current market price, the gap should be at least 25%. So what have I done now? This value multiplied by 0.75. And what is the value I've gotten? 1242. And are we really close to this value right now? 1242, and right now it is at 1259. So really close value we are at right now. So I believe that this can be a good one. So did you understand what we did? Do you think it's logical? Let me repeat, there could be multiple valuation models. I can tell you easily 10 valuation models. But I feel this is a very simple way to calculate. And one more very important feature which I love about this one is there are least possible assumptions. See, whenever we are trying to calculate the future value, it's entirely based on what? Assumptions. And there are many valuation models in which we'll have to calculate assumptions about what will be their sales for the next 3 years. We are no one to check what will be their sales for next 3 years. It will be very difficult to calculate realistic figures. Again, I believe that if you are working in that specific sector, you might know the sector in and out, you might be in a better position to visualize. But we can't calculate this for all. Na? Can I say here it was more mathematical? Less assumptions, more mathematical. And what was the assumption? Assumption itna hi tha that whatever average growth in EBITDA has taken place for the past 3 years, we are expecting that to grow in the next year. I feel this is a very normal assumption to take. So can fundamental analysis be used to also calculate the target price? Yes. So now what is the stepwise thing that we have to do? Step number 1, we have set out our 8-pointer series. From 8-pointer series, we are going to get the filters. ऐसा कौन सी companies है which fit into our criteria? And which website is our friend? Screener, which is going to directly give us a list. Once we get a list, this sheet I'll give to you. By the way, those who are watching these lectures online, this sheet is there in the Google Drive. Okay, so you can download the sheet from Google Drive and you can do all these calculations by yourself also. So what you have to do is go to money control and just copy paste which 2 figures now, tell me. Only 2 figures you have to copy paste. 1 minute. Only 2 figures you have to copy paste. This enterprise value and what? EV by EBITDA value. Correct, na? By the way, this is given directly, this is with formula. Correct? This entire is with formula. Growth in EBITDA is with formula. Average is formula. This is formula. Acha, okay, so this I've deliberately marked it with red. I've inserted a comment. One more thing you'll have to do. What you'll have to do is deduct debt. That one thing you have to do, because that will be different for different companies. Na? I can't put the figure directly here. Okay. Then shares outstanding. This is also to be input. So what I'll do if you want is, I'll just highlight these values that you have to put by yourself. Okay, 1, then 2, this value you have to put by yourself. Here the debt value you have to put, and number of outstanding shares. This is also going to change, na? Only 4 figures and you will get what is the target price, what is the entry price. Job becomes much easy. Logical? Yes. Shall we write down the balance part? Till where we have done? Example, say we have got an expected EBITDA, na? किती percent true असतं. So he is asking what is the sustainability of what we are doing right now. Will this work out in every single case? Answer is no. It can't work in every single case. Finally, we are building an expectation. Na? Whatever I decide about my own company might not also meet my own expectations. So what are we doing on a safer side? Now understand, had I taken a margin of very less amount. So assume, I'll give you a simple example. See, current market price is assume 1242, which is very close. We can take this. And if my target price with all these calculations comes to 1367, with all these calculations, assume it would have come to 1367. Can I say this? I would not have bought this. What is this 1367? If you have understood what I did, I've just multiplied by 1.1, so I've just taken a 10% return. If our target price would have come to 1367, it's a clear-cut ignore. Because 10% is a very low margin. I might not go ahead with this. If I'm getting a good margin, at least 20% margin I'm getting, then I might think about it. Okay, but definitely this valuation model works. I'll tell you, especially works for those which are capital intensive industries. This might not work for a service sector. This is a general observation that I did. Whatever till date, whatever calculations I have done, and I have tried to see that whether it really met what I had expected. In that I found this as my own observation, that majority of the times my success ratio was in capital intensive industries rather than service sector industries. Service sector mein kya hota hai? Especially I tried this with telecom also. But then telecom, the macroeconomic factors played a big role and they could not achieve the targets. So again, analysis is what? Number 1, 8-pointer. Number 2, we try to calculate this. But number 3 is what we are going to do after this is industry analysis. Is this industry worth buying right now? Worth buying into right now or not? If the macroeconomic factors are also or only not supporting this, makes no sense to expect that earning growth will be this much. Or on the other hand, on the flip side, if I'm getting a gap of 25% and right now all the government policies are supporting this type of industry, I must buy into this company. So check what are the supporting factors also. And that's what we are going to do right now. In fact, when I did my own studies, Always do this. Have your own notebook, have your own writing pad. And I do all sorts of, whenever I am checking out any website, any book, I always carry a book with me and I will write down some rough notes, some scribbling here and there. But these help you a lot at some point of time. So when the election results came up, when the election manifesto came up, I was just trying to check that Modi ji is focusing on which type of industries. वो तब मैंने नोट बनाया था. And based on that, I tried to reshuffle my portfolio. But in today's lecture, I'm going to discuss that same whatever I had written in this book. Okay. So whenever you're watching any YouTube video, you're reading anything, make a note of what you're reading into. This might help you in the future. Okay. So let me repeat one more time. If this is the target price, can I say 100% this target price will be met? I can't say this. Okay, when does the probability of meeting this target price increase? When the surrounding factors are also supporting. Then chances that this target price will be met, probability that will be met will increase. One more big word of caution. If the gap is barely 10%, what versus what? Entry versus target. Don't buy into it. At least 25% gap is what I believe. 20 to 25% minimum. तभी अगर 10% मिलेगा तो you'll feel not bad. Okay. See, I'm trying to give you a very conservative view. You all are beginners, I believe. You all have not invested like 50, 60 lakhs in stock market. मराठी में हम बोलते हैं कोळून पेलेलो आम्ही market. So we are like all एकदम fully into the market. I don't believe you are into that category right now. If you are into that category, I would have taught you all the aggressive models. That come what may, bindas. Aggressive models में होता क्या? You could get a good return, but what is the flip side? 40% upside, 40% downside. It's both ways. And then for a beginner, if you get a 40% downside in the beginning only, you will feel stock market is a gamble. That is a conclusion, that is an underline, and you just don't even bother to enter it again. That's why I'm telling you all such strategies which are a little bit conservative, but will help you to enter and get entertained in the stock market for a longer run. Is this okay? Yes. So have you understood this valuation model also perfectly? Can we move on? We had to just write it down. We had calculated expected EBITDA. What is the next step? Calculate forecasted enterprise value. Calculate forecasted enterprise value. And how do we calculate forecasted earning value? Tell me. Correct. Expected EBITDA. एक रह गया आपका expected EBITDA multiplied by something ना. We are calculating enterprise value. How can we directly deduct from EBITDA? First is what? Multiply. So expected EBITDA multiplied by what? This one, X. X of what? 2019, latest X. Latest X is latest EV by EBITDA. And minus what? Minus what? Minus value of debt. Minus value of debt. Okay. Now what is the next step? Shares outstanding. How do we get shares outstanding? Again, बिना शर्माए लिखना है अपने को. Money control. Money control. Shareholding pattern. Money control dash shareholding pattern. Okay, there we are going to get the total number of shares. And what is the last, second last point? Target price is equal to. This step divided by this step, na? So the forecasted EV divided by shares outstanding. And what do we boil down to? No. What is the last one? Entry price. Entry price, what did I say? At least 75%. 75% of your target price. Now here there is no technical analysis involved. I've not seen any chart for this. Okay. I'm not going to check that what is for those anyone who does technical analysis here. So I'm not checking what is the support level, what is the resistance level, nothing. This is purely based on fundamental analysis. Now if you want to make your study a little bit to the next level, then you can check what is the support level, resistance level for Reliance. And if you feel it's at a good support, a little bit bounce back phase, then to matlab no problem in buying. सोने पे सुहागा. हाँ. Okay. So what is he saying? That if the outstanding shares only increases, if they issue fresh shares, then your per share value will go down. So that's what I'm trying about. That is what I was trying to talk about. This is an external factor which comes into picture. This was nowhere in my calculation. This was nowhere in my control. If such things happen, absolutely. But I'll tell you, capital will increase, agreed. Okay, my shares outstanding will increase, my capital will increase, but what will happen, I'll tell you, my logic. Supply of shares increases in the market. So supply of share increase ho gaya, so market price of that share will ideally go down. Normal economics, now more supply, less demand, the share price drops. So it will impact what value? Market capitalization will get impacted. So then ideally the value should drop down. So there could, that's what I'm saying, that ideally they should work, but some factors achanak pop in. That is why we are trying to take this 25% margin. And if the margin is more, again go ahead, no problem. So have you understood this earning valuation model? No doubt. Enterprise ka meaning. Oh, entry price is the buying price. You can buy at this price. Entry price is buying price and target price is the expected price. Target price is expected price. ठीक है? Can we move on? Yes. Now we are on a very important parameter. Now that we have done two major things in our batch as of now. Number one, we talked about the 8 factors, how we can analyze a company. Number two, we have talked about how can we decide whether this price will go up or not, whether I should really buy into this or not. But day one of our lecture, we said that there are 3 analyses in fundamental analysis. Company analysis, industry analysis, and economy analysis. And the most exhaustive analysis is company analysis. Because here we understand each and every term of financial statements one by one. This takes a lot of time. Industry analysis, I believe, is common sense. You will not find even one term, barely will find us 1 or 2 terms where you will feel, oh, I even did not know the meaning of this. Otherwise, industry analysis is common sense. If you are well read, if you read newspapers, if you watch the news, you know what is going around you is actually industry analysis. Okay. So some basic parameters for industry analysis that we are going to discuss. You can just give this heading as of now. Basic parameters for industry analysis. ठीक है? So now what has happened, let us say through our screener and through everything, we have shortlisted, let us say 10 companies. Okay. Now assume that I want to invest in only 3 out of 10. Now I do an analysis of which industry could have a better environment to grow right now. And for that, I analyze certain basic parameters. Number one, is the company that I'm talking about, is it a cyclical industry or not? Some people say cyclical, whatever. I feel it's cyclical industry. These days it's American English, which people believe in, cyclical industry. Okay, so British English is cyclical industry. Okay, so let's understand this term. What do we mean by a cyclical industry? Okay, it is a type of industry which performs well when the overall economic growth is good. Okay, how can we define an economic growth? That is defined by the term GDP. Iska detail tomorrow we are going to talk about. What is exactly GDP? Okay, GDP is, anyone knows the full form? Gross domestic product. Okay, ये कुछ तो साइंस का टर्म बोल रही क्या? हाय, जीएसटी नहीं. Not GST. Okay, GDP is gross domestic product. Okay, how much, in simple words I'll tell you, how much, it's a parameter of measuring growth. If GDP of a country is high, is on an uptrend, it means that country as a whole is growing. In simple words, higher the GDP, better it is for any country. Now better it is for a country. Now we are not talking about better it is for a company. कंट्री लेवल बातें चल रही है, बस छोटी छोटी बातें मैंने यहाँ पे, बड़ी बातें कंट्री लेवल वी आर टॉकिंग अबाउट. ओके, सो नाउ अंडरस्टैंड व्हाट इज अ साइक्लिकल इंडस्ट्री. इफ जीडीपी इज हाई or is on an uptrend, these companies do well. If GDPs are going to go low, these companies are going to perform bad. And every country goes into these ups and downs. No country's GDP I can say is like this, zoom up into the sky. Very theoretical. This can't happen. Every country is going to face some ups and downs, may it be America, may it be India, may it be anyone. Right? Now, can you think about certain industries which will perform better when the overall GDP is high? See, overall GDP is high. It's a flourishing scenario. Means what? Everyone is earning nice. If everyone is earning nice, then ideally the spending capacity is also good. And the best example of cyclical industry is automobile sector. Simple. Today, if the GDP is not good, GDP is finally a gross domestic product, is nothing but overall growth of the country, agreed, but country का growth कहाँ से आया? Country's growth is nothing but the various industries growth as a cumulative. Industries growth कहाँ से आया? Industries is nothing but all the companies growth. Correct, na? Yes. So overall it's a good scenario. So overall people have filled up their pockets with money. They have a spending power. Correct. So typically which companies do well? Cyclical industry, best example is automobile sector. Not necessary. Textile I will not consider in cyclical. Why? I'll tell you. Roti, kapda, makan is a necessity. Cyclical would generally be luxury, is what I believe. Correct? So quickly tell me, pharma, will this be cyclical or not cyclical? Not cyclical. It doesn't depend what is the GDP. I need medicines. Correct? What about this food industry? Not cyclical. Are you getting my point? Yes. So first of all, understand whatever company you are talking about, which type of industry does it fit into? If it is a cyclical industry, then check what is the GDP. Is it in a growth phase or not? Right now, if you know this, India is doing good. ओवरऑल अदर कंट्रीज के कंपैरिजन में इंडियाज जीडीपी इज नॉट स्काई हाई, बट इट इज डेफिनेटली बेटर एज कंपेयर्ड टू other countries. See, we have learned this, na? Company PE versus industry PE. Same logic flows here. Countries GDP in comparison with other countries GDP. India is doing better right now. And if that be the case, then ideally automobile sector could be one to look into for the next 3 to 5 years. Okay. Now, because I'm saying automobile sector, everyone is saying I'll buy all automotive. Please don't. Just one parameter I'm talking about again. If you feel automobile will do good, then try to understand. Number 2, don't concentrate only on one industry. It could be a subset of that industry also. Subset of the industry. I'll talk about automobile also, but just as a different example. So I'm talking about subset of an industry analysis of an industry. So just as an example, okay, I'll just take example which just came into my mind. Let us say I'm talking about pharma. So pharma anyways is not a cyclical, okay, but there could be certain companies which are maybe very much into the last stages of R&D of cancer. Okay, cancer related products they are developing, cancer related medicines they are developing, and they are in the last stages, almost done wala stage hai. Can I say the overall growth of pharma sector versus overall growth of this subsector which is making medicines for cancer, will they outperform? Yes. So try to find out a subset from that industry also. So I'll take the example of automobile. Automobile as a whole might do good, but what is the next in thing for automobile right now? It's electrical vehicles, EV, electrical vehicles. And the other day, which battery, no, Himadri chemicals we were talking about. And what do they manufacture? Lithium and ion batteries. So see, logically, if we are talking about electrical vehicles to really roll out by 2022, that's what our government has told. 2022, you should start EVs on the road, aane chahiye, electrical vehicles. Then what is the strongest thing we need? Batteries. So electrical vehicles, so automobile overall will do good, agreed. But as a subset, these companies which are making batteries, battery companies is what? Is a subset of an industry. Batteries is a subset of an automobile industry. Achha, is this what I'm talking about is rocket science or this is logic? This is logic. If automobiles are going to grow in the near future, if electrical vehicles are going to grow in the near future, I need batteries. Okay. I happened to see a video of Nitin Gadkari ji, and in which someone had asked him a question that if electrical vehicles really come up on streets, and if my battery is about to drain out, जैसे अपना petrol खत्म हो रहा है, we'll go to a petrol pump. If my battery is going down, I'll go to a station, charging station, let us say. And do you think we are going to wait there for 2 hours so that the battery will get charged? I said, no, this is not how it will happen. No, one is backup battery, possibility number one. But we know what happens with our mobiles every day. So we never have this mentality of backups and all that. Okay, what a fantastic thing he had told. Just Google it, this video maybe. YouTube pe hai ye video. He said that if you are talking about a station, a car comes up here. My drawing is horrible, let me tell you. Okay, this is a car, believe it or not. Okay, this comes to a charging station. What a person in the charging station will do, he will measure how much battery is remaining in your car. Like our mobile can also tell that only 8% battery is remaining. Okay, he'll take out the battery from your car. This charging station will have many batteries with them, which are fully charged. He'll just take one battery from that, which is a fully charged battery, replace it here, and he will charge you for 92% of the battery. He will ask you for payment of 92% because 8% you have given to him, na? So if this, and he said, how much time does it take? He said, this will take nothing more than 2 minutes is what he says. He said that electrical vehicle, the fitting of that battery should be so easy. Clutch, pull it out, take, press it in, khatam. is what he had said in the interview. I am not an engineer, so I don't know how much really this is feasible or not. Feasible, can't be feasible. No, see again, this is R&D, na? Right now batteries might be big. Right now batteries might be big, but if they are talking about EVs and if they were to work out this model, they will do some R&D that with lower batteries they will be able to be more and more efficient. Like if you remember that floppy disk, this big floppy disk, and how much? Not even MBs. It used to be 16 KB or something like that. Hmm. Oh, so they are, but see, agreed that if Tesla is working on power chargers, like entire battery can be charged in 10 minutes, you know the position of our country right now. One car charging for 10 minutes, it'll be maddening scenario. So I don't think that is a solution. As a temporary ticket at home, you can do that. But at charging stations, this is not possible. People will, the sound pollution that will happen in our country, you know why sound pollution? Because if 10 minutes one car is at the station, everyone will start honking horns from behind. काय झोपा काढताय काय मग? We'll just start cursing each other. Right. So this should not happen in our country, at least. Where it is a less populated, might work. But I feel this replacement thing works in this case. If it is a what replacement thing, or replacement thing is working in China right now? Oh, so see. On a large scale, is it? Small scale. Okay. Acha. Hmm. Oh. Ah, yes, that's what happens in a cycle dynamo, na? So for you all, he said that from tire friction some electricity is generated, and that might also get shifted. But again, will that be a big one, or maybe till it runs to the charging station or something like that? Okay. Anyways, so I hope you understood what do I mean by subset of an industry. So to do an industry analysis, do you need a finance background, or do you need to have a good reading? You need a good reading. Okay, so you need to understand what is happening around you. Like I said, I might not be an engineer, but I know that something like electrical batteries are there, they're trying replacement. So I ask my engineer friends, do you think this is feasible or not? If they say this is feasible, people are working on this, that, then I might say, okay, then this parameter is ticked off for me then. Okay, so I would take some advice for this. Okay, so second point is clear. Second point is what? Subset of an industry, try to calculate. Try to evaluate, I will say. Acha, are you writing this side by side? Yes? General title, cyclical industry, and you can just write down an example. Acha, meaning of cyclical industry I feel is important. Because it's not a generalized meaning, it's a specific meaning. So if you have written point number 1 as a cyclical industry, write down. It is a type of industry which performs well. It is a type of industry which performs well. When the country's GDP growth where the GDP growth is what? Is high. Can we go on? Yes. Well, okay, so if you want to write down example, automobile is a cyclical type of industry, and pharma is not non-cyclical, because whatever is the GDP, people will need medicines. So automobile, yes, cyclical. Pharma, not a cyclical. So it's, as I said, if it's about a necessity, it's not a cyclical product. Okay. The second point is try to analyze subset of an industry. Subset of an industry. If you want, we can continue with the same example for automobile only. What could be a subset? Companies manufacturing, what is that? Ion and lithium. Is that so? Batteries ही लिखेंगे अपन, हाँ. Manufacturing batteries for electrical vehicles. Can we go on? Yes. What is the next one? Next one is life cycle of a industry. Third point is life cycle. And this is what we learn. Life cycle is actually like what happens with us. We are at a baby phase. Then as time passes, we grow. Then there's some absolute optimum phase in our life. We have money, we are happy, everything is there. But at some point of time, maybe this decline starts, and then finally, death phase. Death phase what will happen for a human. For a company, it's not necessary a death phase. This could be a decline phase, and then the promoters decide fate of the company. The strategists would define the fate of the company. If the strategists are not good enough, if they are not able to have a good strategy in place in the decline phase, it will go to a death phase directly. In 3-4 years, it might go to the death phase. But if the strategists are good, and even if they are able to sustain this for some time, it might zoom back in the future. Okay. So life cycle is what? The company in which I'm trying to invest, in which life cycle it is right now. Try to analyze that. If you're talking about a company which is in this life cycle, it's just at a birth phase, your returns could be exponential. Returns could be amazing. But obviously, what is the downside? Risk is also very high. So like if we are talking about the food deliveries in India right now, I feel it is just at a birth to, there's somewhere around here in India, I feel is a food delivery apps right now, because they are also coming up with newer and newer technologies. I read about Zomato that they are planning that if the delivery is within 3 kilometers, then they are planning that the delivery will be done by cycle. Then it will be more cost effective, na? And within 3 kilometers, they can easily reach by cycle. And if these are bigger distances, they might continue with the traditional way. And the latest thing that they are trying to develop right now is food delivery by drones. Food delivery by drones is something which is like, I can't even imagine what will happen. So I can imagine something like this that I'm teaching to my CA students. And a drone comes in and says, someone is saying, Mera pav bhaji aa gaya. So this, I mean, today we are laughing at it, but you never know that maybe just 5-6 years down the line, students will not be, I hope not so much indisciplined that I'm teaching and in the class only that pav bhaji will come up. But you know, they might go to the corridor, take it from the drone, pay immediately right away, and come back and sit. This really might happen in next 5 years. How many of you had thought just 5 years ago that it will be so easy for you to watch a live telecast of a cricket match just on your mobile? 5 years ago, just 5 years ago, we had not even thought about it. And you see the Hotstar watching, you saw the World Cup, how many million people were watching that. So again, I can say the e-commerce content or all this Netflix and all this, the content which is being developed. So like latest that we are coming up with is Z5 is now promoting very aggressively, and Z is listed company. Okay, so all these, if you feel, are in the, see, all not might be listed, like Zomato is not listed, but there is a company which has invested almost 40% of Zomato, which is listed. Okay, but it has invested into many e-commerce companies. And if you know about this, e-commerce are in heavy losses right now, by the way. Right now they are in heavy losses. They're in a habit forming phase, exactly. So if this clicks, then you might get very good returns. Okay, so if you want to try out such birth phase companies, I believe that you can have a small portfolio allocation. Even if you're a fresh investor, have a very small portfolio allocation, maybe 1% or 2%. So डूब गया तो भाई कितना डूबने वाला है? Even if money is lost, just 1%. But this 1% could go to even 10%, that value. And then you will feel, I should have invested 10%. It could have gone to 100% now. But still, that regret is better than 10% going down to 0. Okay. If you are at this phase, if you are able to catch this train, fantastic. But it's very easy. It's very difficult to, so theoretically I can say invest in growth phase. What growth phase? You have to analyze that, na? You have to understand whether this growth will happen or not. And to analyze whether this growth trajectory will happen or not, we need to understand What are the government policies? If the government policies are in favor, yes, you can very well catch this train of a big growth trajectory. Okay. So the government companies, the government policies, what we have to check. We will discuss about this. But before we talk about the government policies, which will require a lot of space, by the way, or shall I discuss government policies first? I just, when I was reading the manifesto, I just jotted down few points as to what the government was really focusing on. Okay. The very first thing which I saw for government was, I hope you'll agree with this, is Sabka Apna Ghar by 2022. Modi ji has this dream that by 2022, every person must have a house. Okay. Does this mean that real estate will have a boom? Huh? I feel this is a little bit difficult right now because the way real estate is going right now is crazy. It's post demonetization, real estate had a big shock and it is yet to recover from the shock. So I am not still betting on real estate, even if government policy says that everyone should have the house by 2022. But again, I'm using the same logic, subset of industry. Okay, so what could be a subset? If people are really going to buy houses or maybe construct their own houses, chota hi sahi, but they are going to construct their own houses, can I say cement is going to be something which might definitely be a good one? This could be in the growth trajectory. Cement and steel, but right now again steel is facing a big problem right now. Like Tata Steel is like doomed right now, doing very bad right now. Okay, so I'm not going to talk about company specific anyways, but if I'm talking about cement, possibility number one. Acha, by the way, cement has a dual advantage. Why cement has a dual advantage? Because I'll just name this as A, B, C, D. So A is real estate, and I can say B, everyone would agree, one more very important, infra. Infra के लिए भी तो सीमेंट चाहिए ना? To make roads you need cement. To construct airports you need cement. For mining we need cement. I don't know. Acha. Okay. So he's saying that whenever highways or something like that are constructed, you need some other metals also. Acha, stone ka metal. So for that, in this case, for roads, infra, usme bhi roads, then some mining companies could be good. So again, we are using the logic of what? Subset of an industry. Correct? A very simple subset, again of real estate, other than cement, can be paint. Paint. Obviously, na, if you are building houses, paint, interior paint, exterior paint has to come into picture. So paint industry can see a good uptick. And the best allied, which I feel out of these, out of cement, paint, also one step up maybe, I feel it is the housing finance companies. So this is logic, huh? This is nothing to do with finance knowledge. I'm just betting that if the government really keeps its vows, that, see, I don't expect that everyone will really build their own house by 2022. It's very difficult that every Indian will have his or her own house. But even if I say 75%, 80% get covered, that still should be a good number. And for that, for real estate, we need to either buy a house or build a house. To buy a house or to build a house, first money is required. And housing finance companies will definitely do well. For example, huh? India Bulls Housing Finance. Okay, again, I'll tell you, the safest bets among these is HDFC. Very well set. Fantastic financials. HDFC का full form क्या है? हाँ, HDFC का full form is Housing Development Finance Corporation. No, one is HDFC Bank and one is HDFC. These are two different companies. HDFC Bank will give loans for other purposes also. Correct. So HDFC is like the parent company, holding company, and unka HDFC bank mein they have a good stake. So I feel, so if you are asking examples, HDFC can be a very good safe bet for next 5 years. That's what I feel. But again, please do your own analysis. Huh? Don't rely on my analysis. What happens, because see, your risk taking capacity and my risk taking capacity might differ. I might take an aggressive stand sometimes. You might not be in a position to take that, or reverse, I might not feel so comfortable about a specific sector. I might take a back seat, whereas he knows about construction, he might take an aggressive stand. So everyone should have your own fair analysis. Okay, so among housing finance it could be HDFC. If you're talking about paint, Asian Paints is a good one. Even Berger has a good market share. Okay, so Asian Paints or Berger could be a possibility. I guess I have written about cement. Maybe I was just trying to analyze which companies had just chalked out at that time. ACC and Ultratech. You want to write down these examples? You have not written anything. Acha, have you written government policies? Inside government policies, write down A, real estate. Instead of writing real estate, we'll write down real estate ancillaries. We're talking about that, na? Real estate ancillaries. You know what is an ancillary? Usse related. A subset of that. Ancillary, a subset of that. Okay, real estate ancillaries, maybe we talked about 3 ancillaries. So you can take actually housing finance at the top, because that's the first requirement, money. Housing finance companies. Example, you could have loads of examples, but just I'm taking about my own judgment. It's HDFC. Second one, cement. In cement, you could write down ACC, Ultratech, both. Excuse me. ACC and Ultratech. Then next one is paint. Berger and Asian Paints. Tiles could also be one more ancillary. You would just go on and on. I mean, it could be a big list then. Okay, I'm just talking about 2-3 examples. Okay, and one more we talked about was steel. Let us avoid right now, because somehow I'll tell you, steel has its own calculations only. I mean, I don't understand why, but steel has, I feel, a lot of global factors also coming into play for steel. Because you do a fundamental analysis of the company very well, but something globally happens and these steel prices crash or boom, whatever. So I feel, again, if you are a little bit aggressive, go into steel, but if you want to play safe, initially steel is not good sector for a beginner. Global factors impact a lot. So I'll stay away from steel right now. Okay, so if China is actually making steel at a very cheap price, and if we don't impose the anti-dumping duty to that extent, so again it's just going to crash, kill our market. So that's why I'm telling you, steel avoid. Okay. Anti-dumping duty means what? The name itself suggests what China does: dump the products in a country. And what does our government say? Don't dump. If you're dumping products into our country, we will charge an anti-dumping duty. I'll tell you a simple example. In India, if a piece of steel is available at 100 rupees, China says very good, we'll make it available at 70. 30% discount directly. And this is the lowest possible in India, okay? What our government says, we will charge you with an anti-dumping duty. It's like an additional tax that you have to pay, in simple words. How much is anti-dumping duty? 30. Okay, then prices are same, and this will safeguard our country. But we can't just go on charging anti-dumping duty for each and every product. This will affect the global trade. So every trade war ho jayega fir. And if US does that, it's fair. If India does that, people will ask questions. US is the boss. Unfortunate thing. But actually it is the scenario. If we do something, Trump will question, why you did this? But if Trump does something, no one will really question why you did this. Could you have imagined India-China trade war for such a long time? Why India, China, any country and China trade war for such a long time? No one even would have imagined that. But US China trade war is happening right now. Since I feel since almost 1 year, every now and then it's coming in the newspaper. No one questions America. It's actually, matlab, like there's a gunda na in every team. Right now, it's America. Gunda is a very harsh word actually. It's like a boss. I mean, no one challenges them right now. But who is challenging right now? It is China who is challenging USA right now. That's what is happening.
It started with Huawei ban.
It started with हाँ Huawei phone ban. वहां से वो actually चालू हुआ था. Right now, so China is actually trying to give a tough fight to USA right now, and that is why this big clash is going on. Okay, anyways, coming back to our main example, 3 ancillaries we talked about in real estate. Real estate ancillary. Second one is what? Infrastructure. So in infra, all-time favorite, L&T. An all-time favorite of any and every investor. Well, in the past 3-4 years, it has not done so well. It has not outperformed. But so that's what I believe, that last 3-4 years, it was like in this phase, somewhere around in this phase, not so much good growth. If it gets good projects, if the execution is higher, they might get good, we might get good returns in the coming 3 to 5 years. So one is infra. Again, ancillary to that, like he pointed out, could be mining also. But I have not, frankly speaking, I don't have any mining company in my portfolio. So I have not studied mining as a sector as a whole. So you can give it a shot. Mining could be one. Okay, let's move on to the third one. Third one, again, I feel is a big thing which might come into play in the next 3 to 5 years, and that is insurance. Very, very ignored sector in India right now. Everyone feels that insurance is nonsense. Not everyone is a harsh word again. Very few people are properly insured. How many of you have actually thought about how much should be my insurance? And you feel that you have taken a right amount of insurance? Anyone sitting in the class? Just one. We never even bother to check that really. So what is insurance? What is a life insurance? I actually calculate my worth. If something happens to me, my family can't get me back, but what they can get is the earnings what I used to bring in the family. Okay. If I'm insured only up to 1 year of my earning, do you think that's sufficient? So you should also calculate how much should be your insurance. That's a big thing in financial planning, and very few people actually bother to even check this. And government has taken a very, very big and positive move towards insurance. If you know this Pradhan Mantri Suraksha Bima Yojana, Pradhan Mantri Jeevan Jyoti Yojana, both these are related to insurance, and they are actually giving a big boost to insurance sector right now. They are taking out many, many policies. So you need to know 2 types of insurances. One is a life insurance, one is a general insurance, also known as a non-life insurance. Life insurance is on a person if something happens to him, and general lecture hai? Okay, just 2 minutes. And second one is a general insurance, is like your vehicle insurance, fire insurance, burglary insurance, all that. So both these insurances are important. So we'll just write this down. Third one is what? Insurance. In insurance, 2 types. Which 2 types? General insurance and life insurance. In life insurance, again, I'll just tell you 2 companies. Okay, in life insurance, I feel HDFC Life could be again a good one. Just have a look at these fundamentals. Huh? I'm just telling you few names. And in general insurance, you can have a look at ICICI Lombard as well. Bajaj is also a very big player. Okay. We are running out of time a little bit. So what I feel is balance explanation part, and we are not yet finished. I have totally taken out 5 sectors. So we'll continue about this tomorrow, and still 2-3 more parameters for industry analysis, and tomorrow we'll talk about economy analysis as well. Okay, I'll see you tomorrow. Bye bye.